All right, folks. Well, we'll go ahead and get started. Good morning to everyone. This continues our twice a week in the Trenches series. Today's topic, we're going to specifically focus on your compliance management systems and how they need to be responsive and how you update those during the COVID-19 crisis. A few logistical issues. Next Tuesday is a very highly subscribed event. It's going to be an overview and a discussion of the Main Street Lending Program, which is the second phase of business lending under the CARES Act. Obviously, it follows in the wake of the PPP, the Paycheck Protection Program, and is designed for larger businesses that may exceed some of the restrictions that were placed in the PPP. So that's next Tuesday, 11 o'clock, same time. We'll be joined by John Talcott for that one. That Thursday, we're going to have our Consumer in the Trenches on debt collection and the Fair Credit Reporting Act. So please feel free to register if you'd like to participate in that. The following week will be special asset and default management on Tuesday, and then cybersecurity risks in the wake of COVID-19 the following Thursday. Feel free, if you need assistance with those links, to reach out. A few logistical things. I'm joined today by Craig Nazzaro, who you've heard from many times in these In the Trenches series. Formerly in-house counsel, has also been in private practice and went through the wake of the Great Recession with one of the nation's large banks. And so glad to have him here. Also, we have John Willis, who has been in-house counsel at two different banks and has walked them through a number of their economic uncertainties as they not only did mergers and acquisitions during the recession, but also dealt with compliance issues. Anyone, anytime, can post questions to the panelists. We'll try to respond to those as they come up, or alternatively, we'll leave some time at the end for questions. And then also after that, we are free to ask any questions you'd like on any topic, and we will simply be here as a resource for you. So when we talk about today, let's talk a little bit about where we're going, which is regardless of who you are, whether you're a depository, non-bank lenders, fintech, servicers, vendors to financial institutions or financial services companies, this is one of the things that you need to be responsive to in the wake of COVID-19. What we're talking about today is how are you looking at your compliance programs, your compliance management system, and adapting it to the new programs that are coming out, new procedures that you and your institution have put in place to respond to COVID-19. How are you thinking about keeping your board and senior management apprised of what it is you're doing? Because that's particularly challenging when we can't have board meetings. It's becoming difficult to have presentations to board and senior management. We've got to continue to have all of this interaction so that we maintain these compliance programs. We'll then talk about some program concerns and updates, just things for you to be aware of that we've seen as hot button items. We'll talk briefly about third-party vendor management, some of the issues there, and then we'll close out talking about BSA, AML, and some of the recent regulatory guidance that may serve as additional resources for you as you move forward in adapting your CMS policies. At this point, we'll shift over to Craig, and he's going to talk a little bit about why this is so important right now.
Thanks, Brad. So after the 2008 financial crisis, it was basically a landscape shift for compliance focus. It went from not a back burner topic of the prudential regulators, but it definitely wasn't as focused as after the CFPB came on the scene and started to really drill down into consumer compliance programs and an entity's overall CMS. The graphic on this slide, it really kind of illustrates how it's a life cycle, and the CMS is constantly updating. Your CMS should constantly be informing the next step, and just a living, breathing document. Your policies and procedures, your training, your monitoring, testing, the corrective action you take away from those issues, and then the implementation of the responsibilities from your compliance verticals. And to take anything away from this hour today would be that this is the perfect opportunity to kind of show that in action and show that your CMS is a living, breathing document. It is being informed by your observations of the market and the regulatory landscape. Next slide, Brad. So Also, as you're trying to implement that CMS in a way that shows that it's constantly evolving, you also want to realize that a regulator is not looking for 100% avoidance. It's never the case where you're walking into an exam and your lack of findings, or that you're just trying to present a unified front, and that you have such great controls out there that nothing is being found, nothing is being communicated to the lines of business. There's no errors at all because you just have such fabulous controls implemented. What you want to do is show how your CMS is working operationally, what you're finding and what those findings are driving, or what you're noticing in the market and how that's informing the CMS, and how everything is constantly shifting and you're doing your best to root out the compliance and regulatory risks that are inherent within your business lines. Regulators want to see that. It's all risk-based, so they want to see that you're approaching your management of your CMS in a way that is structured to find the greatest risk that's there, bring it up to the forefront and the front line, escalate it to the board and senior management, and kind of do your best to put controls around that. So never try to hide or try to minimize the findings. Always try to, if you do find something, get it out there, fix it, remediate it, and then document exactly how you did that, because that's going to go a long way with the regulators. Next step, Brad.
Yeah.
Next slide.
Craig, if I could step in 1 second on that slide to just sort of reiterate what you're saying is, again, I think that 100% avoidance, of complaints and issues is certainly not the goal, and sometimes it can be just as big of a red flag in your exams if you're reporting very few or no issues and no complaints, as opposed to reporting many. I mean, the goal, again, as Craig, you were saying, is complaints and issues are just a part of doing business. What you want to show is that your CMS program is working, that you're finding the issues, you're addressing them, remediating them, and doing your root cause analysis.
Great point, John. Totally agree. And this slide just further drives the point home that this is your opportunity to showcase your ability to adjust to changing environments and anticipate future risks and mitigate those consumer risks that are out there. It really is an opportune moment to document what you're escalating and document any change. It'll go a long way in 12 months, in 24 months when the regulators are in, that they saw this shift occurring in real time when the focus was maybe going from originations into default, was going into a different credit environment. You really want to show that not only in the business units, but also in your compliance verticals. Next slide, Brad. I think this one's you.
Yeah, and so, like any compliance cycle, we have to first start with how are we going to assess these new risks? And it's your basic blocking and tackling with risk assessments, but it's a little bit nuanced as we talk about the concerns associated with COVID-19, which is it's becoming more and more difficult, and we're hearing this from our clients, to keep up with the pace of change. Are we adequately understanding these new risks as they're developing? We're flipping on non-face-to-face customer transactions. Do we have the knowledge to understand those risks? We're having new laws, regulations, FAQs issued daily, sometimes twice daily. And are you able to keep up with that volume and truly understand and assess how that's going to impact your particular institution? And then particularly challenging, do we have the ability to provide that compliance support to a diverse set of employees across our entire platform? And what we mean by that is you have IT working remotely, you have compliance working remotely, BSA AML is working remotely. How do you integrate for product rollouts, for compliance changes, when all these different groups are pulling in different directions, trying to respond to immediate concerns, but also working from home, telecommuting, maybe you have a weekly call? How do you coordinate all of these employees together? And then perhaps the biggest one, and we'll touch on this in a number of slides, is how are you educating employees, vendors, and then adapting your systems? It's really a perfect storm for compliance because it's very difficult right now to both manage quickly evolving compliance obligations and effectively roll them out with the speed we're expecting. because we're all working remotely. We're all working on different schedules. We all have 5-year-olds running over our heads, and it sounds like a freight train's running through the house. Whatever that case may be, it's challenging the logistical systems of our institutions, and we're being challenged by regulators and the government to adapt to these changes. Remember, as we think about risk, to keep all of that global risk together. We're talking specifically today about compliance, but we really need to be cognizant of all of those areas of risk. This is the areas that you see every single time. But understand, as we're talking today, COVID-19 is impacting each of these areas. It's not just a compliance function, and we've got to think about it more globally. And so we always put this up here to remind us, we're talking about one or two of the buckets here. But one of the things you'll learn from our In the Trenches series, or if you're a compliance professional or work with compliance professionals in your institution, is we've got to look at this globally. We've got to understand it from a whole system standpoint to keep all of those pieces together. John, you want to talk about enterprise risk?
Sure, will do. And would echo what's been said by Brad and Craig before as I get into enterprise risk management. The key is that things are changing very rapidly and may seem almost impossible to keep up with as it relates to CMS and ERM. But the key is to be proactive. It's always better when getting in front of examiners to be able to note where your issues may be, your plan of attack of those issues, as opposed to ignoring the issues and hoping that the regulators won't catch them. And then if they do, you're caught in a position of having to explain why you didn't raise a certain issue, as opposed to being able to explain to the regulators how you're attacking that issue. So again, these are extremely challenging times, and everyone has 1,000 things to do. But please remember what's coming with your regulatory exams. They're going to be asking questions about CMS and ERM, and be sure to not to ignore these important components of your institution. Like getting into enterprise risk management, like CMS, with ERM, you want to make sure you set the tone at the top and that the board is fully informed, and the committee, oftentimes at your risk committee level, but your risk committee is fully informed that they're receiving good, digestible information that helps explain at that level what your current key risks are. If you have changed any of your strategic goals, have you changed your risk appetite statement related to any of your key risks? And again, these are all items that the regulators are going to want to see in the exam. So just ensure that from the top down, these matters are being addressed. Again, with COVID-19, we're speaking today more about CMS, but make sure you take a holistic review of ERM, again, your primary risk categories and your risk appetite statements, and make adjustments as necessary. This could include adjusting KPIs and KRIs. I think Brad will speak about that in a second when we look at some risk assessment tools, but just be mindful of the current state of things and the uncertainty with how long it may last, so that you can adequately judge your risk. With specific regard to compliance, I think it's important to track and report on number of consumer complaints, legal violations, additional new vendors, new products that you're adding, any data privacy violations that are resulting from people working remotely. Any increase in these items is certainly showing an increase in risk, and the fact that you may need to review your compliance program and may make adjustments so that, again, you can attack those things. As it relates to ERM, a lot of times I know that your business leaders are, it's not their most fun thing to do during the day to have to update ERM information and risk categories and risk metrics, but it's certainly important. It's something that the regulators are going to expect that you're doing. So with that, as it shows on the slide, a lot of times I think ERM committees, risk committees may meet quarterly as opposed to monthly. Certainly in these times, you'll want to reevaluate your meeting schedule for your risk and compliance committees whether it be management committees, board committees, just to make sure that you have meetings that are contemporaneous with the things that are going on, and by the time you meet, you've already missed the boat. Brad, you can move along to the next slide. Yep.
Yeah, one of the things we wanted to kind of show and really drive this point home is what you see on the slide is for those of you who have used our risk assessment tool that categorizes all of the consumer compliance risk and then rates them and allows you to track in real time what your risk priorities are and how they're evolving. If you think about COVID-19, and forgive the slew of red arrows on this slide, it's driving changes to almost every aspect of your risk assessment. Clearly, in key categories, inherent risk is escalating because of the speed of product rollouts, some of the challenges associated with these law changes, some of the requirements that you get employees working in areas that they may not have traditionally worked. And then that's driving current risk to the bank, resulting mitigation effectiveness. And then ultimately, we believe the regulators are going to change some of their focus. Just like Craig said on a number of the other webinars, what we can learn from the prior recession is that when this starts cycling out, we run into this scenario where all of the regulators want us to be proactive, responsive, and help for the next 3 months. A year from now, you go into your exam cycle, and you're now challenged by these same regulators as to why you did things certain ways. Why did you do this modification but not a modification for someone else? Is that consistent with your policies and procedures? Was it done in a compliant fashion? And so there's something of an amnesia that comes about at that point where we have to make sure we're preparing for that appropriately. So regardless of if you're using some of our risk tools or you're using other parties' risk assessment tools, make sure you're looking at that prioritization, looking at that list and understanding how it's changing and adapting. And maybe you had a massive focus on doing some sort of remediation in response to brokered deposits. That may not be your number one risk priority for the next month to month and a half. It may be training for default collections, loss mitigation, and loan workouts. And so if you're using these tools that are ranking risk areas, make sure you're updating them and assessing whether that is or is not still truly a risk associated, or at least a priority for your institution right now. As we talk about your overall compliance program build, remember that there are all these subcategories within the assessment, which is we don't think about compliance as just a static program. Instead, and this is why it's really challenging, is it includes things like training, complaint responses, QA and monitoring on top of the policies and procedures that we initially think of. And so obviously right now it's extremely difficult to do training for a broad scope of employees inside of your institution. As you're managing complaints, you may have a call center working remotely who's then interfacing with a relationship banker or a customer service rep who's not at the same location on a different schedule. You may have quality assurance and monitoring going on, but it's not in the same speed or time that you were doing previously. All of this driving this overall compliance management program. So we need to make sure we're thinking about it globally. Craig, you want to talk about prioritization?
Sure. So as we go through the compliance program, you're going to want to identify, challenges that are going to be immediately presentable to you as an institution. That's in your day-to-day operations, challenges from a regulatory perspective, what has changed, and then how are you going to conform to those challenges, or how are you going to control those? So here we just put out some points for thought and focus. Like for training programs for your employees, are you going to want to look at loss mitigation, loan workouts, overdraft, and NSF fees? For example, on overdraft fees, we're starting to see now the question last night for the rollout of the IRS funds that are being forwarded to consumers for their COVID impact. Are you going to hit those when they're deposited into your consumer's account? Are you going to hit those for fees that are outstanding? We saw this morning a lot of the larger banks were saying that they're not going to do that. I think Wells Fargo and Citi announced that they're halting the collection of those types of fees on these funds for the next month. JP Morgan said something similar, and I think a lot of the banks are now faced with the decision, look, we don't know, we can't get in there fast enough to put a workaround in our core system. So how are you going to approach that? Are you going to do it on a one-off basis? Does that have any ECOA impact or fair lending impact? Questions like that are going to start to pop up all over the place because everything's changing so quickly.
Craig, one of the things you had said, and I think it's very important, is it's not just that you put in place a new policy and procedure, but you're going to have staff spread across, geographically across your institution's footprint who's all having to respond to this in real time. And how are you going to train them so that the call center knows what your institution's position is going to be on those funds? How do you then document it in a policy? What happens if there's another group in, say, deposit operations that's working those severely delinquent accounts, and how are you responding to that? While at the same time keeping knowledge and experienced personnel on the front lines who can respond to these changes, because these FAQs are changing daily. And I may grab that next one, Craig. And part of the issue that comes about is exactly what Craig hit on, which is how are you then going to adapt this to your system, software, and infrastructure? How many of us plan to be this reliant on electronic payment systems, non-face-to-face banking infrastructure? How many of us planned that all of our transactions would be through e-sign or DocuSign or any of the other third-party document and electronic signing vendors? And how many of us planned for this level of use of mobile and online portals? We daily hear about banks and lenders having their websites crashed because of the influx of people trying to use them. Last night, there were reports at one point that over half of Venmo was shut down because so many people were trying to access their treasury checks that had been deposited. Hundreds of bank websites and credit union websites were crashing last night because of the number of people who were trying to get online at the same time to look for those treasury checks. And so it's really not just policy and procedures. You've got to pick up the infrastructure, your IT, all of this, as well as roll out your training. And it's a huge lift for folks inside of institutions, but we can't lose sight of that basic blocking and tackling of a compliance management system when we're dealing with crisis. And I think the biggest takeaway, if I could leave everyone with one thing, is make sure you're including all key stakeholders in these new launches. If you're going to roll out PPP programs, make sure you're talking to IT, make sure you're talking to compliance, make sure you're talking to your lenders, make sure it's being adapted to your policies and procedures. Take a whole bank approach to make sure you get input from all the key stakeholders.
And one thing I want to add too, it seems like a Herculean effort just with the speed at which the changes are hitting the industry. It's even more rapid than we saw in 2008 and 2009. You're being asked to shift over like your entire workforce within a week, and everything going online, which affects so many controls that you have out there. I don't want to make it sound like this is mandatory to do like within the next month. You have to have these updates to your compliance management system, but you really do want to start to document your prioritization. It's easier to have that conversation with the regulator that yes, we understood the risks that were out there and kind of applied our own custom or bespoke prioritization process to those risks to manage them. That goes a much farther way than we just didn't have the FTE capacity to deal with such a seismic shift as moving everybody online within a week. So like if you don't have a formal process to put issues as they come in through a tracking or a change management process, have a COVID-19 strategic plan that is including regulatory and compliance issues and that prioritizes which ones you need to address first. And you'll see that as we go through the slides, like just highlighting where we're seeing issues pop up in the first few weeks. These are going to it's going to grow exponentially as more these programs play out. the issues start to materialize from having your workforce all move to a work from home structure, you're going to start to see these regulatory issues and compliance issues pop up with greater frequency as you move further and further into the year. Next slide, Brad. So this is touching on your procedures, for example. Like if you just drill down in your procedure section of your compliance program, what should you be focusing on, or what do you want to contemplate for a COVID-19 response plan, for example? And some of those are what we're seeing are issues in debt collection, because everything's shifting to a default mentality over the next couple of months. Loss mitigation procedures, RESPA Reg X issues that may not have been addressed previously in your institution. Credit reporting, we're seeing the changes in the CARE Act, GLBA, privacy issues. Do you have procedures around working from home from GLBA or any other of the privacy regulations? Like what are your controls for that? Did you contemplate everybody working from a laptop from their house rather than in an office? The PPP program, again, as Brad was just saying on the last slide, you have to have procedures around that to make sure that you're attacking it in a uniform, centralized fashion. Rego insider questions with the PPP program, we've seen an onslaught of questions on how that applies to the program as it rolls out, and conflicts between the guidance that's given, verbal guidance that's given from the regulators, written guidance that's given from the regulators, and conflicts within the language of the regs themselves. When you see programs roll out at this speed, they'd rather deal with the arguments later than not have the program rolled out as fast as possible. And you're starting to see that like in the Rego issues, COA issues. You're going to start to see a bunch of issues where you might not have contemplated before, like lost MIT, how you're prioritizing that, or even with those overdraft fees that I'm saying, you have to start to think about if you're going to collect. If you waive a few or not waiving others, does that have a disparate impact across your portfolio? MLA and SCRA functions have a large reputational risk as you move forward. You want to make sure your controls there are as strong as possible. And the mortgage servicing restrictions and dual tracking is just going to become more and more of a pain point as that default portfolio grows within your business lines.
Yeah, and I do want to correct. Go ahead, John. I think you were going to hit on as well.
Yeah, I was going to say, with regard to policies and procedures, and this is kind of outlined in the top tip, I found it very important that with policies and procedures to always keep those on the front line that are dealing with customers in mind as you're drafting your policies and procedures. Plain language, digestible instructions, flow charts, quick reference guides, FAQs were always the go-to resources that I found for the frontline folks, because they need a quick place to go to get a quick answer. And then as it specifically relates to PPP and what Craig was talking about, the rules seem to be changing daily. It's hard to develop a policy or a procedure on a program that is brand new and changing. However, I would encourage that as you're drafting policies and procedures for your frontline, sometimes saying that you don't know an answer as opposed to guessing and giving misinformation is better. As Craig was saying, the rules are changing, so sometimes the proper answer is I don't know, or you should consult with your counsel on that issue. But again, I think that compliance and legal risk oftentimes are elevated with misinformation as opposed to sometimes just not being able to give any information.
And when you empower the people that are on the front lines to guess by not having a program drafted, that's when you're going to start to see the fallout in 6 months from you weren't even aware that such a disparate approach was taken in a rollout of the PPP program, or different approaches to that the overdraft fees being collected, for example. If you don't have anything addressing that or addressing that issue in the form of an FAQ or a waterfall or simple guidance sent out of your front line, or even we don't know how we're approaching this, hold tight or escalate, or with direction for the frontline people to escalate, you're going to find out when you're tested, and the look-back period includes these dates, that your institution was handling it in a variety of different ways, some good, some bad, some atrocious. And you really don't want to be in front of the regulator saying, we have those different approaches because we failed to roll out guidance in a timely fashion, or we didn't prioritize that risk properly, or we didn't even contemplate it at all. That's the worst you could possibly say is, oh, we were unaware, we didn't have it on a risk or an issues list somewhere. We just failed to address it and failed to even contemplate it. Next slide, Brad. So this is also a good time. It's an opportunity to kind of really see how the elements of a proper and a best practice of CMS is really working, how it's informed, how every pillar of the CMS is informing one another. So your CMS consumer complaint response is going to be a great tool to kind of show regulators that you were thinking about something. If you have a new program rollout like PPP, or you have an issue like the overdraft fees, or a increase in default and lost mid, you can, a great way to do that is kind of look to your complaint program and change the escalated terms, change what you want to see in legal, what you want to see in risk and compliance, escalate it up to you for decisioning. And you might think it's time to, like, if you haven't, I want to see everything that has a mention of SCRA or military service. I want to see anything about overdraft for the next 2 months to see how badly our consumers are being affected by us, garnishing deposits from the IRS, or from Treasury. You even if you don't have those complaints come in, just the indication that you contemplated it and tried to roll it out really goes a long way with the regulators and really shows that you were prioritizing risk within your CMS. And it's a great way to show how they're informing one another. What you don't want to have is, your complaint program operating as usual, and it didn't even budge in program design or documentation when the whole world shifted. It's something that has to change. All the elements of the CMS have to change given the enormity of the situation that you're dealing with. Next slide, Brad.
Craig, if I could add one thing specifically as it relates to PPP, I can envision, because of the issues with PPP and the questions that still remain with regard to eligibility, how to calculate your payroll cost, how to count the number of employees, the complaints, while those aren't a consumer loan, the complaints are certainly probably on their way, and that, unless more funds get allocated, you certainly have issues with the fact that there are applications that just simply won't be able to be processed. So might be a good idea to consider putting a resource specifically on PPP for the time being as it relates to your complaint response, to make sure that those are all coming into a centralized place, and it could assist with root cause analysis to make sure that it's a centralized part of your organization that is seeing exactly what's all going on with PPP as it relates to the complaints that may be coming in.
Exactly, totally agree. And like the Fair Credit Reporting Act, for example, as I'm looking at the slide, there's changes in the regulation from the CARES Act. So you're going to want to test your business units and your controls to make sure that they're operating correctly under those changes. The best way to see that is if people start to complain. Like, really truly use it as the canary in the coal mine that's supposed to be deployed as. Next slide, Brad. This is again back to monitoring and testing. So really your monitoring and testing schedules should not look the same to this month. And in the second quarter of 2020, your monitoring and testing schedule should be reprioritized. I don't think it's possible for you to be in the first quarter with your monitoring and testing schedule out there and then have a pandemic hit, your entire workforce shift, some of the regs change, credit quality completely shift, your risk assessments being impacted, and not change your monitoring and testing schedule. And while they haven't said anything about this, the regulators for sure are going to ask the question, why didn't your monitoring and testing schedule change when your whole all of your operations within your business lines changed or in the month of March and April. And again, you're going to want to have another opportunity here to showcase how your controls within your compliance groups are informing one another. So your change in inherent risk that Brad was speaking about earlier in your risk assessment and your KRIs that are changing should be informing your monitoring and testing schedule. Your complaint reporting, again, any trending that you have there should be informing your monitoring and training schedule, as well as the new products that you're rolling out, the PPP program, get some training around that. As which mentioned earlier, your privacy, changes to privacy have to be impacted, and when your whole workforce is moved from home, get some training around that as well. When you look at the guidance for training, it constantly mentions that it should be timely, it should be proactive, and in advance of any expected changes. What you have here is a gigantic change, so you have to be as proactive as possible and move it out in a timely fashion. Again, I'm not saying with your FTE capacity that you have to do this within the next month, but start to document a plan that you started to think about this, and your CMS is starting to, conform by contemplating the changes and the necessities that the pandemic brought. Next slide, Brad. John, I think this one's you.
Yes. This slide, I think, is important that we put in to note the importance of governance and your structure with regard to compliance and the importance of compliance. It's important to set the tone from the top as it relates to compliance, and that compliance is key to your institution, and employees are hearing that from board and executive management. What the key, I think, with this slide that you want to remember is that you're with regard to compliance in your program, you're creating a record with all of the actions that you take that is the record that you want to use in your exam to show your regulators that these are all the things that we are doing, these are the steps we are taking, this is coming from the board down through management in a consistent fashion, noting the importance that compliance is to your institution. One thing I would suggest, though, is don't forget that ultimately your board's responsibility is oversight, and it's easy to inundate board packages and board meetings with detailed information that to a large extent is just not digestible at the board level. So, again, make sure that you efficiently utilize your management committees, your board level risk audit, and other committees that deal with compliance issues, and create the record again from a top down level. There are 15 examples of some items that we've included in the slide, just to be mindful of that. As it says, when your exam happens and the regulators come in the door, these are the items that they're going to ask for. So make sure when you're thinking through board management and oversight, you've got your record established, that you have done these things, that you have these things, and you've got a good compliance story to tell.
The one thing I would add to that, John, is we're saying, to John's point, give something that's digestible to the board. I've had clients that, do a data dump. Here's 800 pages of our monitoring and testing, or a 1,000-page risk assessment. There's no way anyone's going to take anything away from that, and the regulators know that, no board member could possibly glean any information from that. And then I've also had clients that have, filtered out so much that the board's not hearing anything. If you're in that compliance vertical, you want to make sure that, your top 3 bullet points are heard. At least guarantee that in your next board meeting, you're addressing some of the impacts to your CMS. It has to be documented. How it gets up there, the best practice would be, utilize and leverage your committees as John's indicating, but just make sure that it is present in a proper fashion. It's almost an art and less of a science, and getting the right amount of information in front of the board.
I'd agree, Craig.
Now, as we talk about the regulatory change, we've got to think about it as well in terms of regulatory change management. And so remember our basic process as we're thinking about these new items that are coming through. How are we going to monitor for those changes, evaluate what the impact is on our institution, communicate it out to key stakeholders, then develop response frameworks, plans of action, and then really assess what it is we're doing presently to determine if there are items that need to be retroactively addressed. And then perhaps the most important, this is going to be the biggest challenge in the near term, is how are we maintaining records of that compliance oversight? We're doing things so quickly. I have various clients, whether they're lenders or banks or credit unions or even payments companies. They are changing systems every single day to try to respond. We just finished building one of the largest PPP electronic signing and electronic originations platforms, and we were doing it in real time with them. Compliance, legal, commercial lending, all working in real time with that client, because that's the speed that you have to adapt to circumstances right now. And so it's really key that you have that process in place so that you can make sure you're not missing those key steps. I mean, it's really easy to hear that something is changing and forget, I need to make sure everybody's involved. We hear every day, one of my partners was recently working on a big deployment for a bank. And he happened to be speaking to the general counsel the next day, and the general counsel said, well, why are you still working on that? We put that on pause. And the general, my colleague said, oh gosh, sorry about that. Okay, we'll be having to pause it. And then the next day, one of the officers of the bank calls up and says, why are you not working on this program? And my colleague says, well, because we're told we were going to pause this program while the bank focused on other things. And these are, high-level officers inside of a bank. And so it becomes difficult when we're all working remotely, we're all on cell phones, we're all trying to maintain a flood of emails for things like that to slip through the cracks. So make sure you're following your basic process. Don't lose sight of the basics as we're running through this. Similarly, don't forget about audit and regulator management. We've had a lot of clients who are dealing with past compliance issues. They're working their way through them. Maybe they had MRAs. Maybe they're trying to get issues addressed for their regulators. Yes, it's very hard to get in front of a regulator right now. Yes, it's hard to get a regulator's attention right now. But don't lose sight of the fact that we still have to be dealing with those basic obligations in the compliance program, which is, are we staying on top of audits? Are we staying on top of exam cycles or responses that may be due to regulators? Are we keeping abreast of those timelines? Or if those timelines need to be moved, are we making a cognizant effort to move them and then documenting why? It may be that if you're dealing with a concern one of your regulators raised in a previous exam about commercial lending, you need to be working on that. But I think most regulators would understand if you documented, we're extending our timelines by 2 weeks because we had to roll out the PPP program, or we're rolling out the Main Street Loan Program. Make sure you're documenting it, make sure you're making a conscious effort, but don't lose sight of the basic audit and regulator management functions.
Similarly, Brad, if I could add.
Oh, yeah.
I was going to say, if I could, that's a great point. And one thing I was going to add is to just keep in mind, it sort of goes without saying, but the regulators get the benefit of looking at what you did in hindsight, while the institution is making decisions daily and in a quick fashion. So I would agree with you 100%. If there is a component of your system or a project you have underway that needs to be paused, make sure you document that you've paused it such that you're not questioned about it. Or if you are questioned about it in your exam, you've got the document to say, look, we made this decision at this time for these reasons, and here's proof of that.
Yeah, and on that same note, don't forget that you still have your analysis and your reporting obligations that are running in the background. Make sure we're still validating data. You may be submitting your HUD reports, and you're having to do that in the midst of all of this. Don't let those little basics fall to the side, particularly if you have large infrastructures where different people play different roles. I was talking to an attorney at one of our clients last night, and what she relayed to me is they had a whole series of teams that were built to address an MRA from the Bureau. And, everybody thought everyone else was continuing to work on the project while everyone was working remotely. But at the same time, there was nobody who was directly overseeing each person, and different people viewed the nature of the crisis differently, and certain things had started to fall to the wayside. Luckily, they had controls in place. That particular general counsel saw it happening, picked up, and they have time to kind of put the train back on the track, if you will. But don't lose sight of these basic internal and external reporting obligations, making sure that members of your team are staying on top of these compliance obligations. Next, we'll kind of dive into third-party oversight, which is particularly challenging nowadays. And The big thing here, and I always do every third-party vendor management presentation, I start with this because the FDIC leads with this every time, is remember, you can outsource a task, but you can never outsource responsibility. All of this remains at the feet of the board of directors and then in turn senior management. Everything is treated as though the bank, the credit union, the lender was handling this directly, and you cannot outsource this obligation no matter what. And in these times, when we think about the cycle of third-party vendor management, ongoing diligence and oversight have skyrocketed in their importance. How are we maintaining those systems to make sure we're keeping those vendors on track? Here we've got what the prudential regulators have identified as the highest risk categories for third-party oversight. The ones that have yellow, supposed to be gold, we'll call them yellow stars next to them. The ones that have yellow stars are the ones that, just thinking about it, have been dramatically changed by the COVID-19 crisis. These were already our highest risk third-party relationships, and all the crisis has done is increase the focus on some of these starred items. As Craig mentioned earlier, your core provider is running systems in the background. They are integrating with your document creation groups. They're then feeding that over to your electronic signatures infrastructure. All of that has to work together, and we never thought we'd have to rely upon it to this level. And so all of the risks that were associated with these key vendor relationships have just escalated. Make sure you're appropriately managing them and you're doing that diligence and oversight, because if something is going to get you in trouble, if we learned anything from the recession, one of the biggest risk factors for banks and other financial institutions were not necessarily the bad actors in the banks or oversights by the banks themselves. It was vendors working on behalf of those banks. Somebody wasn't watching what their agents were doing. So be particularly cognizant of this particular risk. Craig, you want to talk about a little bit about the unique issues with mortgage?
Sure. I brought this up in previous webinars, but it does have an impact to our discussion here today with your compliance management systems again. Specifically, the risk that Brad was talking about with your third-party oversight is you're going to start to see it first in mortgage servicing. A lot of institutions, have private label agreements with subservicers, have subservicing agreements. You're going to want to start to pay closer attention to those as your default rates rise, as we move through, the shifting of the economy. You're going to want to look to see if you have delegated authority out to these subservicers, or what kind of loss-mid authority you have given these subservicers if you want to change that. What kind of reputational risks are involved with there? Like, are you confident that when you onboarded these subservicers, were you looking at their ability to escalate issues, like we were saying in your complaint process internal at the bank? You might want to see any service member complaints, just so you make sure that you're not, trying to collect somebody who's on active duty, or it's a way to check your mortgage servicing vendor here. How often do you want to see that complaint reporting, and what kind of escalations do you want them to come up to you with? It's all going to be key to managing your regulatory exposure over the next 12 to 24 months, and the regulators are going to be looking at this closely, given the shift in performing to non-performing assets. Also, as we get further through the cycle, you're going to want to start to look at your property foreclosure vendors. Last time we did this 10 years ago, a lot of the regulatory risk really struck up from there. You have nightmare scenarios where property preservation vendors, are tread on criminal ground. Did they take a firearm from the property? Did they harm somebody that was in the property? What are the background checks that your property pres vendors are doing? When you talk about customer contact, property pres vendors are right there in the person's home. So it's a high-risk area that people often overlook until you're faced with a nightmare scenario. Same with your foreclosure vendors. What kind of firms are you utilizing? Did you move to a regional model during the last downturn, or are you still managing multiple firms over a large footprint? All issues that you should be concerned with over the next 12 months from third-party oversight. Next slide, Brad.
Yep. Craig, I was going to say, if I could add one other thing on the third-party vendors specifically related to PPP, is that as institutions either reach their risk tolerance with the amount of capital or funds that they want to put towards PPP in order to be able to service customers. I think banks are looking for third-party referral sources, entering into referral agreements, joint marketing agreements to be able to send their customer PPP applications to a third party to process. I would say that, with those, make sure you're doing your diligence with regard to the contract review, and the contract clearly states who has the obligations for making the loan, BSA, AML, answering complaints, and as Craig was mentioning before, make sure that the contract itself too talks about the parties' rights and obligations to share information with regard to complaints. So specifically with PPP, don't forget to keep those same things in mind with any joint marketing or referral vendor you may enter into an agreement with.
And during our last bit of time here, because we want to leave some time for questions here, just want to cover a few other operational issues that we've seen come up. As I say, this is the focus of our In the Trenches series. We're going to have a special webinar specifically on data security and compliance during these times. But understand just some of the data at the moment is a 667% increase in spear phishing and a 26% increase in web skimming in 1 month. Lots of cyber hackers are viewing this right now as an opportunity to attack financial institutions, and particularly clients of financial institutions. Make sure that particularly your IT staff is being very proactive about how they're responding to this. We're all rolling out new hardware, new systems. We're putting them online, but we're also limiting the ability of that IT infrastructure to adapt to these times. And what I mean by that is they're not on site, they're having to do things remotely. And make sure you have backups for key personnel. If you have your director of IT go out because he or she is suffering from this illness, it's unlikely they're able to continue to maintain your systems, even assuming a very quick and quick recovery. So make sure you have those contingencies as business continuity plans in place, because it's becoming a bigger and bigger issue. One of the things that we'll mention here is just understand that the regulators have become very flexible with how they're addressing compliance right now and how they're permitting institutions to adapt to customers. We put some slides in here you can reference in the future that deal with some of that flexibility. We've actually been tracking it on a website if you'd like to see all of it at the state and federal level. But understand, most of the regulators are saying, as long as you can document benefits for the consumers, we'll allow you to be flexible. But make sure you're thinking globally. Don't just assume because a customer asks for something, it's going to benefit the customer. One of the things Craig always warned me about is, for instance, in the mortgage crisis, you start capitalizing interest, deferring payments, extending terms, you may be harming the consumer, even though the immediate is you're keeping him or her in the home. So be really cognizant about the broad impact that you may have when you're making these types of changes. The last kind of topic we'll cover very briefly is just BSA AML. Everybody is going to online, e-banking, e-payments to lenders, e-transactions. BSA AML still exists. PPP says BSA AML still exists. You can't get past the obligation of your bank or your credit union or as a lender to know your customer. What is that CIP process? What is that EDD process? And so make sure you're not losing sight of that. We've got some tactics here you can use and ways of thinking about it. But perhaps the biggest is make sure you're taking that global look at the risk associated with it. Similarly, FinCEN, Financial Crimes Enforcement Network of Treasury, has been doing COVID-19 updates, particularly some of the scams they're seeing. Make sure your BSA AML officers are staying on top of this, because just as fast as compliance generally is adapting, we're seeing the same with specifically focused on BSA AML, not just with compliance generally. And then I think, John, you were going to mention a few things about PPP and the BSA.
Sure. Honestly, I think one of the relatively clear instructions as a part of the PPP interim final rule and some of the Q&A related to BSA AML, and I think Brad summed it up well. It still exists, and while the standards potentially were somewhat relaxed as a part of PPP in the interim final rule, it seems as though they're indicating that they certainly still want you to otherwise comply with your own program. So for existing customers, you don't necessarily need to verify BSA requirements unless your program would otherwise call for it. For new customers, you certainly have to go through your BSA AML, CDD, and EDD programs. And generally, I think the recommendation is just, comply with your program. Treat a PPP loan as any others. Again, while the standards are relaxed, your program is still there and it's still in place, and you're going to be expected to comply with it. And then, Brad, do you want to speak to the tip at the bottom of the slide?
Yeah, and we'll kind of leave you with this, which is, again, everything's changing so dynamically. We've had a couple of our institutions reach out to us. Don't confuse BSA AML and some of the obligations under these SBA programs or the mortgage intervention programs with other compliance obligations. We've had a ton of people calling and asking about e-sign and UETA compliance. We obviously have that training module we did last week on how you do compliant e-sign documents. But don't lose sight of that, which is just because you're running a program electronically doesn't mean those no longer apply. You still have to comply with the Electronic Signatures Act and make sure you have enforceable documents. Same thing with BSA AML. Just because it doesn't set out those obligations in these programs didn't mean it went away, and you still have to follow your institution's policies on this. A few last kind of resources for you. We've got some CFPB reports here that may be helpful to you. We always try to include those as a quick reference guide to some of the various publications that came out of the recession that deal with a lot of the issues we're talking about now that are there for your reference in the future. We'll leave you with this before we open the group up to questions. We'll continue these in the trenches next week. Obviously, we'll have the Main Street Lending Program on Tuesday, and then debt collections and FCRA concerns on Thursday. This, along with all of the presentations, are available on YouTube for rebroadcast, and also all of the slides that we use are available on our website. If you need access to those, just let any of us know. We're certainly there to help. Biggest thing is thank you to each of you for being in the trenches, working with customers to try to remain responsive in this particularly trying time for them. And we're happy to be a resource for you as you come up with these issues. At this time, we'll open it up to some of the questions. Feel free inside of the portal. You can send questions in. Those just come to the presenters. They don't get broadcast to the group. We did have one person ask about help with risk assessment tools. Certainly, if you're looking at risk assessments, you're looking at scoring matrices and want to talk about some of our databases of risk assessment tools we've got right now, it's up to about 2,000 item risk assessments. It contains the complete compliance obligations outlined in the guidance, and then has dynamic scoring. Feel free to reach out to your Nelson Mullins contact. We'll be happy to work with you on those and how to develop those. Other questions or thoughts, Craig or John, on issues that we've talked about today? Like I said, anybody feel free to submit those questions. We'll be happy to answer them, whether it deals with today's topics or anything right now.
The only thing I would add, Brad, is we're creating these topics off questions that we're seeing from our clients, or as we aggregate a bunch of issues that our clients are facing, we're trying to build out what we believe would be the most useful information that could be digested in an hour, or decks that are useful to take away for reference. But just as Brad's soliciting questions, feel free to reach out to any of those on this list here. That are in the financial regulatory team under Brad. If you have any suggestions or issues that you're seeing that you would like possibly addressed in a webinar, we could try to build those in for you.
Yeah, one last thing I'll raise is, with the PPP rollout, because we've had a number of questions associated with this, make sure that you've planned ahead for how you're going to deal with the expected cap that's getting ready to be hit. Make sure that you understand what it is that's coming up in terms of whether or not this gets additional funding or not. And they may or may not shut down the E-Tran portal, but make sure you have a policy and procedure in place as to how you're going to respond to that, because I could see that being an issue here in the near term. All right. Well, everyone, thanks so much for your participation today. We look forward to hearing from you Tuesday. If you need access to the webinar on the Main Street program, just let us know. We'll plan to talk to you then. And otherwise, appreciate what you're doing. Keep up, stay safe, stay well, and we will talk to you next week. Thanks, everybody.
Thank you.
Thanks, Brad. Thanks, everyone.
How's it going, man?